Hi, welcome to the presentation on business or product portfolio analysis. Today, many organizations have got a large number of products or business portfolios. You would have seen, again, just example of ITC and Reliance Group, where in ITC you would have seen different categories or different even unrelated areas, starting from agri to paper, stationery, cigarette, and food products and toiletries, etc. Similarly, if you see in the Reliance Group, they are having from Reliance oil and gas to petrochemical to telecom and life sciences. Now, recently they're talking about digital and entertainment and other things also. So now, what exactly the requirement to go for a portfolio analysis is a big question now. Because as I seen in the earlier slide, many companies have gone for multiple businesses and products, and each business or product operate in different business environment, starting from their competitive situation, the political environment, the technological environment, the social environment, the economical environment. So the management basically needs a lot of questions for each of the products. Should he support this particular product or business for growth? Should he maintain it, or should he exit this line? Should he commit investment or not? In case I am going to commit, how exactly I should prioritize the investment? Any scope for business or technological disruption? So like that, a lot of such questions are all coming up there, and a holistic approach which may provide answers to all such questions is through the portfolio analysis. So Peter Drucker actually started this concept called product portfolio analysis, where he has grouped the products or business into 6 different categories. First group is all called strength categories. So let us see the 3 products under the strength category. One is called the today's breadwinners. That is, they're all most profitable today, and we have to maintain a good investment to keep the things moving. The Alto and Swift cars of Maruti comes under the particular category. That is the today's breadwinner category. Then we have tomorrow's breadwinners. That means these businesses or the products have the potential to contribute in the future. So obviously you have to, unless you make a lot of investments there, you may not be able to get the benefit tomorrow. So you would have seen the recent Reliance AGM. Reliance has committed a lot of investments both through equity and otherwise for the telecom, retail and digital, because they are all going to be the future businesses. So the Reliance consider these 3 businesses called the tomorrow's breadwinners. What about yesterday breadwinner? So this is the third category. They are all most profitable in the past but not today. To maintain a minimum investment until they resume the generating the profits. So because you cannot just totally withdraw the investment, you just maintain some small amount of investment and then take a call. After that, the company may even take a call to discontinue the products. One of the interesting example I want to quote here is the RPG Group Spencer Outlet. See, today is a retailing era, but even this retailing era, we are not seeing much of action in the Spencer Outlet. Probably it is not doesn't fit into the group's philosophy or whatever, we don't know. So actually, it is under the yesterday's breadwinners category. Then the second category of products under the Peter Drucker's product portfolio is called weaknesses group. So 2 categories of products are there. One is called the investments in the managerial ego. That is, products backed by influential managers have little proven demand in the market and typically waste the resources. You also would have seen press statements echoing the similar thing. So the typical example we can think of under the category is the Tata Nano car. So in fact, that's what the things are all about. Then the failure, the second category under the weakness is a failure. That is, a failed in the past and have no future in the current form should be ideally discontinued unless there is a way to successfully reposition them. So 2 examples I want to quote here is a MAN Trucks in India. That is, a MAN is basically a German company, one of the largest truck manufacturers in the world, but somehow is not able to fit into Indian scheme of things, so he decided to quit. Same is the case with General Motors. So they also said that we may not be able to really market our products in India because Indian market is a very complex market, but we will continue to operate to supply the products all over the world. So the third category under the Peter Drucker's product portfolio is called, they are neither the strengths nor the weaknesses. First is the development. That is product under the development category. So a decision on whether to invest more or not need to be taken after a thorough analysis and return on investment. A very interesting example one can think of under the category is the Hyperloop transport. In fact, you would have seen a lot of news items about it. So excited about the whole thing. You can even travel from Chennai to Bangalore in about 20 minutes time and all that. It takes people at a speed of about 1,000 kilometers and all that at the ground level itself. You would have seen a picture here. The second category is called sleeper. These products have been around for quite some time but failed to establish themselves. A very apt example we can talk under the category is a dishwasher. In fact, you would not have seen any advertisement in the TV or any media about the dishwasher, even though this product is there in India for quite some time, but nobody is bothered. We really do not know the reason. There are so many intricate reasons will be there, like it is not really suitable to Indian cooking requirement or whatever it is. But recently, you would have seen because of the coronavirus, and many houses they stopped utilizing the services of the servant maids, and now the demand for dishwashers has gone up, and all the companies who are making dishwashers they have got a huge order book and they are not able to serve and all that. So now the dishwasher at one point of time all become a weakness in the product portfolio, suddenly become a strength in the product portfolio of Bosch and other people. So this is a very interesting example. So considering based on all these concepts, Boston Consulting Group have developed a thing called BCG growth matrix. You would have seen the matrix here. So here they are talking about 4 category of products: star category, question mark category, then cash cow, and also dogs. So by mapping the relative market share and market growth rate. Relative market share is nothing but your company sales volume divided by the sales volume of the major competitor, and market growth rate is your increase in the company's current year sales divided by the last year sales. So these are the 2 parameters considered to map these products. So let us go with the products in detail. First is a star category. Obviously, they are on the high growth and high market share category, and they are the leaders in the business. They definitely require huge amount of investment to maintain the market share. At the same time, the cash also generation also quite high. And unless you maintain this investment, you may not be able to maintain the market share. Otherwise, they slip into cash cow, and later on they'll become dog also. So you have to be very careful. Maruti Decide car is a very classical example under the category. Earlier, Maruti car was having a waiting period of about 6 to 9 months with all the global competition. But today, with the COVID and all that, the waiting period has come down to about 2 months. Probably it will again bounce back to earlier level very soon. Similarly, Hindustan Levers, Vim, Surf Excel, ITC's hotel business, they all typically come under the category. Normally, the strategy followed is called the build strategy here. The second is called the cash cow. They are operating in the low growth but high market share. So they are the basic foundations of the company, and definitely they are the stars of yesterday, and they generate more cash than what is required. So normally organization will try to milk the cash cow for the cash requirement, and they are normally located in industry that is normally matured in nature, not growing or not declining. So Maruti Alto is a very, or the entry level cars of Maruti is a very typical products under this category. Similarly, Hindustan Lever's red label tea as well as ITC cigarette business with absolutely no competition. So normally the strategies followed under this categories are all called harvest strategy. The third thing is the question mark, that is basically on the high growth and low market share. And most businesses actually start as a question mark. They may have to be putting a lot of cash. I mean, like we have to make a lot of investment, because as the market share grows, you should be able to encash the market share. And why they are all called question mark? Because the question marks have got the potential to get matured into a star, and eventually into a cash cow, and finally into a dog. But if you do not handle the question mark properly, if you do not do a proper study, do not give strategic support, question mark will drop straight away into dog. You lose all the opportunity. So you have to be very careful with the question mark business, and actually normally you have to put a lot of investment to keep the question mark on. And a very excellent example we can talk under the category is the Reliance investments into retail, digital, and telecom. And the last AGM very thoroughly explains how exactly Reliance is focusing these 3 businesses as a question mark business, because they see tremendous potential to grow. That's why they're able to bring a lot of global investors. More than about 13, 14 global investors have come, put in a lot of equity, and more investors also in the pipeline. So it's a very interesting case to watch. Similarly, Mahindra's investment in defense and aerospace. So Mahindra has decided to focus this particular sector because government is also opening up this sector, and Tamil Nadu opened up specialized industrial parks for defense manufacture, aerospace manufacture, and all that. So Mahindra is trying to take advantage of the situation. And finally, your dog business, the low growth and low market share business, and they'll take up a lot of cash from the organization. They do not have the potential to bring in more cash in the future, and the company should try to put efforts to keep the number of dogs minimum. They should try to disinvest the business. The ITC's match industries, match business is one such category. Same is the case with your Tata Motors Nano car. So you have to go for a diverse strategy. The only exception we can talk under the category, well, quite known to everybody, is the Royal Enfield motorcycle, which was basically from the dog business. Today they have become a star category business, because they're able to reposition the product as a very cost-effective alternate for high-end bikes in the global market itself. So it's a very, very interesting case study, is a Royal Enfield, which is a dog becoming a star. So there are few exceptional cases of that in the world, and this is one such case. So what are the major strategic options we have understood from this BCG growth matrix? Cash cow should be milked for cash to reinvest into the star, because star require large amount of money, not only star but also question mark, and cash cow is only cash generator. And the question mark business should be thoroughly examined and invested, or should exit depending upon the chances of becoming star. So that call the management has to take. So whether they are confident enough to take the question mark into star, or if they are not confident, better to drop it or quit the business. Doc should be liquidated or repositioned depending upon the study and your understanding, your confidence level and all that. But one important point is that we should always have some question marks in the pipeline, because unless you have got a question marks in the pipeline, tomorrow you may not be able to have stars and you may not be able to have cash cows day after tomorrow. So that means you have to continuously keep some question mark business into your portfolio and keep studying them and try to mature them into a star business. So what are the major limitations of this BCG growth matrix? Actually, you are only using only two dimensions. One is the relative market share and one is the market growth rate. And getting data for both those things are not going to be easy and not very reliable also. And plus, using the two dimensions, mapping the whole portfolio sometimes becoming too simplistic. So from that point of view, these are all the limitations. That's why you are also going to be other G9 cell model and all that we have gone. We'll see in the other presentations later. But one important point here is that the business with a low market share can be profitable also. That's one of the major limitation of this particular matrix, because the niche players like Rolls-Royce, Mercedes-Benz and all that, they're all highly profitable, but their market share is very low. So that means in all this niche marketing, this concept actually doesn't hold good. So otherwise, this BCG matrix broadly, it helps the organization to study their various products or portfolios and come to a good conclusion. So hope you all really enjoyed this presentation. Hope this presentation was quite useful to all of you. Thanks for your patient listening.